Asia's easing economic headwinds make way for stronger recovery. This was, friends, the latest update on economic growth by IMF. Let us study what they have just recently published. The outlook has brightened, but important long term challenges remain, including for China's economy, the region's largest. Friends, the economic headwinds that faced Asia and the Pacific last year have started to fade now. Global financial conditions have eased, food and oil prices are down, and China's economy is rebounding again. So that's a good story for now. These developments are helping improve prospectors across the region, with growth set to accelerate to 4.7% this year for China, from 3.8% last year in 2022. This will make it by far the most dynamic of the world's major regions and a bright spot in a slowing global economy. So, yes, friends, that's great that China's growth has been upgraded and the region's emerging and developing economies poised to expand by 5.3% this year. Drive this dynamism. These economies are hitting their stride as pandemic supply chain disruptions fade and the service sector booms. Here, China and India alone are expected to contribute more than half of the global growth this year. This is the most important. Yes, I repeat, India and China are going to contribute more than half of global growth this year, with the rest of Asia contributing an additional quarter. So, what is growing this year? Worldwide? Yes, Asia and majorly India and China. Cambodia, Indonesia, Malaysia, the Philippines, Thailand, and Vietnam are all back to their robust pre pandemic growth. As we can see here, India and China, the brightest spot of world, just as we discussed, you can see from April 2021 to latest April 24. The blue line is China, then is India, and yellow is rest of Asia. So we can see that India and China, if combined together, then they both the countries contribute more than 50% of total world's growth. So that's great. The most significant revision since IMF last published forecast in October has been to China, where a sudden reopening has paved the way for a faster than expected rebound in activity. China has strong trade and tourism linkages. So this is positive news for Asia. So why? As half of the region's trade take place between its economies. IMF analysis in the last regional economic outlook for Asia and the Pacific shows that for every percentage point of higher growth in China, please note it, this is important. For every percentage point of higher growth in China, output in rest of Asia rises by around 0.3%. While benefiting from these developments, prospects for Asia's advanced economies are more mixed. The near term outlook, for example, Japan is stronger, supported by accommodative policies, border reopening, and supply chain improvements, while growth would fall back in 2024 as conditions normalize and policy support eases. Here, the strong performance of manufacturing exports, has also started to cool under the weight of slowing global trading partners. For Korea, Singapore, and Taiwan, province of China, the technology cycle visible in the sagging price of microchips is a drag on exports that's likely to last through year end. But with growth throughout to be bottoming, yeah, but with growth thought to be bottoming out in the rest of the world, external demand should firm heading in the next year. Asia's inflation, right? Now we can talk about inflation. Asia's inflation, which rose worryingly above central bank targets last year. Yeah, we saw in India also. Right? It was above not only 4, but it went above 6 also. Is poised by is poised to moderate now. We saw during last 3 quarters. Yes, past quarter was not so good, but it is moderating. There are now encouraging signs that headline inflation peaked during the second half of the last year, though core inflation is proving more persistent and is yet to ease definitely. We expect inflation to return to central bank targets sometime next year amid an easing of financial and commodity headwinds. So inflations look better. Global financial conditions has eased somewhat. And with them, the US dollar has lost some strength. Central banks in Asia have been hiking interest rates as they tackle about target inflation, right? So our main target was inflation, and that was the reason we saw some hikes in interest rate. These factors have helped in Asian currencies rebound, with most erasing about half of last year losses, which has eased pressure on domestic prices. Right? You can see in the chart easing currency pressure. For example, the first one bar is for Japan. January 2022, October, what was the trend? And you can see October 2022 to date, right? In the same way, you can see India also, January 2022 to date, right? Commodity prices. Again, we are talking about inflation. Commodity prices soared following Russia's invasion of Ukraine, squeezing Asia's energy importers early last year. Right? We saw this last year. At the same time, soaring shipping cost raised the cost of imported goods. Right? And we have been talking about this thing also about imported inflation with particularly strong impacts on the Pacific Island countries. But more recently, steady deadlines in both these factors have taken pressure off current counts and inflations. While inflation is moving in the right direction, central banks need to stay alert. Core inflation is still running above target, right? This was the comment by IMF. The big supply shocks and permanent structural realignment associated with the pandemic have made calibrating monetary policy particularly challenging. Signals in the data about second round effects are mixed, further heightening uncertainty for policy makers. Till the time we may not see inflation coming back to normal, yeah, the rate hikes should be seen even in future. And finally, the renewed dynamism of the Chinese economy may put upward pressure on global commodity and service prices also, particularly in countries expecting resurgent tourism. This means that central banks should trade carefully of reaffirming their commitment to price stability. Indeed, they may need to hike rates further if core inflation does not show clear signs of returning to target. All right. While the short term outlook has brightened, yes, agreed, important long term challenges remain still. Elevated debt and financial risk still are there. We saw elevation of debt and even financial risk in many Asian countries during recent times. What happened? Another important revision to the outlook for China in IMF's downgrade of its medium term prospects. Just like the near term acceleration in growth in China is expected to generate positive spillovers, the slowdown in coming years will weigh on growth prospects across Asia's highly integrated supply chains and around the world. This will make reforms to boost productivity and long term growth more urgent across Asia. We already saw fiscal deficits during the pandemic and higher long term interest rates over the past year, right, due to interest rate hikes added to public debt burdens. We saw what happened in Pak, Bangladesh, Sri Lanka, with several Asian countries facing debt distress. Authorities must continue with their plans for gradual fiscal consolidation. So, this comment was also given by IMF. Doing so will also ensure that monetary and fiscal policies are not acting at cross purposes. Finally, many Asian countries face elevated financial vulnerabilities with high leverage across household and corporate sectors. Right? Still, we are comfortable in India, right? And significant bank exposure to real estate downturns, right? Definitely real estate downturn due to high inflation, high interest rates. So this suggests subtle policy trade-offs between controlling inflation and ensuring financial stability and the need to strengthen resolution frameworks. Just we can see what was the projections given by IMF. You can see Asia. Last year it grew by 3.8%. This year expected to grow by 4.7% and next year 4.5%. Advanced economies, if we look for all Pacific Island countries, Australia, New Zealand, Japan, combined all we can see advanced economies grow by 2.1% last year, expected to grow by 1.9% this year and 1.7% next year. If we talk about emerging market and developing economies, they grew last year 4.3%, this year 5.3% expected, and next year 5.2%. Here we can see the most dynamic data is about India. Yes, India, that is the reason. See, India is having the great growth, and China. If we combined India and China both, see, China is already a major economy, big economy. India also big economy. We are at fifth rank. If we combine China and India's growth this year, then the growth will be contributing 50% to whole world. Yes, India definitely stays bright spot. What's the conclusion? Yes, we are facing some challenging time, and this is the challenging time. Your company's demand have been hurted a little bit, but profits are hurted moreover, right? This year we saw margins getting shrinked, your profits getting lowered, and that's the challenge in your long term investment. But all those who are accumulating for long term should definitely add during this vulnerable time so that they can buy more quantity at same price, same cost, right? So what's the conclusion? Invest in India. Yes, near term you may see some challenging. Long term, we are going to see a very good growth in India. This was all from Profit from It, the Stock Market Training Institute, and India's Frontrunner Fund. Data was extracted from IMF's latest update. If you are looking for such type of update regularly, subscribe the channel. So thank you so much and best of luck to everybody. Jai Hind dosto.